The market is about to make a very big decision. Bitcoin has bounced, altcoins are moving higher, and on Twitter and across social media, everyone is celebrating. But there's something nobody's telling you, and once you understand it, you'll start seeing this rebound in a completely different way. Here's something you absolutely need to understand if you want to survive in this market. Markets no longer move based on facts, they move based on expectations. In the past, you needed a real agreement or confirmed event for prices to rise. Today, you don't. A headline, a tweet, a comment, even if this could happen, is enough for money to start flowing in, and that's where the problem begins. The market moves ahead of events, and often it moves too far ahead. If you step back and observe calmly, you'll notice a very clear pattern, and I want you to remember this because it's key. So the real question is, what has actually changed? And if you're honest with yourself, the answer is almost nothing. This has an important consequence. Every time the market reacts to something that never materializes, it loses credibility. And when that happens, price movements become more violent. But be careful. It would be a mistake to think this is all just hype. There's something more happening beneath the surface. We're seeing real buying, spot buying, actual money entering the market. And that changes the context completely. Those shorts start closing. And how do they exit? They buy. That buying pushes price even higher. It creates a chain reaction. That's why you sometimes see rallies that look irrational. Now let's talk technicals. Explain simply so everyone can follow. Bitcoin is currently trading inside a range, as you can see on the screen. There's no clear trend right now. We have key zones we discussed in previous videos. The lower area around $66,000 in dollars, and the upper zone around $66 in dollars and $66,000. This is very important to understand. Price hasn't decided yet. The market is balanced. Neither buyers nor sellers fully control the situation. And when that happens, markets move sideways, control the situation. And when that happens, markets move. This is where many people talk about manipulation. But let's explain it properly, because it's not manipulation. It's simply how markets work. Large players need liquidity. Institutions need orders to fill. And that liquidity exists in stop losses, emotions, and retail decisions. So what do? They move price within the range. They buy low, sell high, and repeat the process, generating enough movement to profit consistently. And here comes a very common mistake, buying at the top when everything is going up and euphoria is everywhere. And honestly, this situation doesn't look easy to resolve. We may actually be closer to escalation than to a solution. One of the most important factors right now is oil. The first scenario, continued volatility followed by a drop, a strong shakeout, and a broad market reset. The second scenario, a powerful rebound, but only if a real catalyst appears. Both are possible right now. And here's the key point. This will likely be decided within hours or days. Important decisions are about to be made, and the market will react quickly. Right now, the environment is range, volatility, and uncertainty. This is not the moment to chase price. So that's today's analysis. If you take only one idea from this entire video, let it be this. Markets don't move because of what happens. They move because of what happens. They move because of what people believe is going to happen. They move based on expectations, liquidity, and positioning. That's why you see rallies that don't make sense and drops that feel unjustified. But everything becomes logical once you understand the context. So next time you see breaking news or an urgent headline, don't react immediately. Pause for a second and ask yourself, does this actually change anything, or is it just the same story being repeated again? Only for those who know how to wait for their moment.